Welcome to this week's edition of Your Wealth. Now, in the wake of the global turmoil, the global financial turmoil, I've invited Dean MacDonald, the Vice President of Portfolio Management of First Global Financial Services, to discuss some issues, the turmoil, its impact on Jamaica, and the important question of how do I invest my money in these turbulent times. Dean, welcome to Your Wealth.
Thank you, Owen.
Okay. Now, in the wake of the global financial meltdown, yes, indeed, another global financial meltdown triggered by the downgrade of the U.S. by S&P, I'd like to ask you this morning, what are the possible implications for Jamaica? And also, what do we invest in at this time? But first of all, let's look at the broader picture. What are the implications on a small island state like Jamaica, so heavily dependent on trade, tourism, mining, etc.?
Well, I mean, Owen, what we're seeing is that there are debt-riddled countries in Europe and even the U.S., which we usually have as a, the AAA credit rating investment grade country, coming under pressure in recent days because of the debates in Congress, the disunity in the ECB as well in addressing some of the problems of some of these countries, Portugal, Ireland, and most recently Italy and Spain. What these trends are going to lead to as these countries try to find ways to cut expenditure is that we're going to see world growth again slowing down, and there are now probabilities, higher probabilities of a recession, re-entering a recession where there's actually a contraction in some of these economies. What that means for Jamaica? Well, ultimately the US is Jamaica's largest trading partner. If we see where consumer spending in the US slows down, that has implications for people's decisions around where they spend their vacation or if they go on a vacation outside of the US. It has implications for our ability to grow our exports overseas, and that can have problems for us in terms of our US dollar revenues coming into Jamaica. So, it's going to be a tough time, and we really, I think, have to watch the macroeconomic indicators in the next few weeks to see if we're really heading, in a regressive manner back towards a recession type activity.
Ironically, on the day when the Dow Jones Industrial Average fell by over 500 points, our own stock market indices advance.
Yes.
How so? What's happening there?
I think what is happening is that, and it goes across the board. What is going to happen, despite all these volatile conditions in the stock markets globally, I think what was instrumental and a signal for us that the stock markets eventually will have to turn is the announcement by the U.S. Federal Reserve on Monday or Tuesday this week that they will be keeping rates near zero for the next 2 years until mid-2013. What does that mean? It means that if you keep money stored in the most safe forms of investment, which is money market type instruments or bank deposits, you're going to end up in a situation where you're not earning anything on your money, and inflation is moving.
With all this volatility globally, and volatility that is likely to impact on us with possibly devastating effects, do I put my money under the bed, under the mattress, so to speak? What do I do? What investment options do I have?
Right. I mean, I think the current situation is uneasy for investors, but I think cash is king, but you can't stay in cash indefinitely. what you have to do in the next few months, if the markets really continue to be like this, it's creating a great opportunity. There are a lot of people that would have missed out in 2008 when we first entered the financial crisis because of fear, and I think we're getting a second opportunity here. You know, what we have to keep in mind is the context in which we're going to operate over the next few years. We're going to operate in an environment where interest rates remain low. So how do I make my money work? You have to look at the real sector for opportunities, and you do that. For a lot of investors, we do that not by building our own business, but by buying into companies that have a good story going forward. Locally, for example, if you're looking for stocks or companies that are good dividend stocks, which is what we recommend in this environment, whether locally or overseas, you can't ignore a company that has on every year since 2005, when we really had troubles in the market, Carreras, on a total return basis between the income you receive from dividends and capital appreciation has been the outperformer. You can't ignore that stock. Year to date, it's up about 4.69% in terms of dividends alone, which is tax-free. Scotia Group is over 4% in terms of its dividend as well. And Scotia Group is a very strong brand in Jamaica and continues to grow. On the junior listings, interestingly, there are some opportunities there that for retail investors who have small amounts of funds and really wants to whet their appetite in the stock market. I think companies such as Jamaica Teas just this week reported a 99% increase in profits up to the end of June. We saw Lasco Manufacturing for its first quarter ended June also reporting profits of 92%. So these are companies that are in the real sector and are doing very, very well. And Lasco Manufacturing year to date, had you bought that stock at the start, you'd be up 52% year to date. So how can you ignore those returns when money market rates are 5-6% tax before tax? As we look out towards for investors that want to look at the overseas markets, again, my recommendation, if you're concerned about the US itself, then you need to buy into companies that have a diversified income stream. So there are companies that are invested, they sell their products globally. Yes. So they're benefiting from what is happening in the China and some of the Brazils and some of these emerging nations that continue to grow at much faster rates than the UK, the US, and these developed nations. So some of the stocks we like, include a Nike, for example, that has shown tremendous profits globally, despite the recession-like conditions. We also like Macy's, and Macy's has grown in the US as well, not because the average consumer isn't spending, but because Macy's focus on its online business has worked very well for it, in addition to the fact that they seem to target the high-end consumer who is indifferent to what is happening in the recession. If they're going to buy their Coach bag, they're going to buy their Coach bag as ladies.
So how do we get the question of how does the average Jamaican buy the Macy's stock, for example, or the Nikes?
Well, I mean, there are different ways. I mean, brokers such as First Global do offer investors the opportunity to buy stocks on the overseas market. So you can come to us, we'll give you the advice and also facilitate the transaction. There are other ways for investors to get into the markets. There are online companies in the US that facilitate investors doing their own purchases as well. But I think if you want the advice to before jumping into these markets, then you may want to take the route of going through brokers like FGFS.
Yes, and certainly persons licensed to give
investment advice. Very important.
No, I'm going to go back to my one of the questions I asked at first. In this environment,
yes,
should I put my cash in a safe at home or under the mattress, so to speak?
Well, I think it comes down to you can't put your cash under the mattress because it can't work under the mattress. It won't grow, right? I think for different investors at different stages of their life cycle, you will do different things, but the fact is you need to have an asset allocation that reflects your stage and financial position. For younger investors, I think this is a very good opportunity to have a strong stock allocation going forward, because interest rates being at near zero means that investors will be forced to go into stock markets, and so we will see a continued trend of stocks doing well at some point. This volatility will go away at some point, and the question is, how do I take advantage of it, and very quickly? For the investors who are on the closer to retirement, there are investments, long-term investment accounts that are, once you keep that money in for 5 years, it's tax-free. So that is a tax-efficient option. There are IRAs as well that allow you investment.
These are individual retirement accounts,
correct?
Yes, yeah.
That allow you to invest in a tax-efficient manner as well. And there are unit trusts in which will give you that opportunity as well. So the point is, for an investor that's closer to retirement, the question is, what is your asset allocation? Yes, you need to have some cash, but you also need to have income-bearing investments. Yes, yeah. Now, if you're buying bonds, for example, or you're buying into a bond fund, what in this environment, to be honest, I mean, yields have compressed quite a bit on bonds. So the question down the road is, are yields about to turn? And if that's the case, the prices will fall. What you want to be in as a long-term investor is either countries or companies that have a very strong credit rating. What it will mean is that you'll take a lower yield but it does give you the safety. Yes, so I give you an example. Barbados, I think, is still in this region, is still a better investment grade bond if you're looking for diversification outside of Jamaica. Bahamas, which is rated A by one of the rating agencies, A3 by Moody's, is also a good option if you're looking for diversification. Or the Sagicor 2016, which is a double B plus rating from S&P, is another option if you're looking for income-bearing opportunities. So you can't avoid working cash. The question is, to what degree are you in risky or less risky investments? Yeah. For somebody closer to retirement, naturally your tendency would be to have a lower allocation towards stocks and more towards some of these income-bearing opportunities.
Yes. Well, Dean, thank you very much.
My pleasure. My pleasure.
Dean MacDonald there, the Vice President of Portfolio Management at First Global Financial Services. And, of course, we address the issue of how do I invest my money, my hard-earned money, in this turbulent period. Thanks again, Dean.
Thank you, Owen.